Hi, happy Monday and welcome back to Mortgage Market Monday, a week in review with the Landry team. Mixed bag of news affected the market last week. Stronger than expected data came out, which could have triggered some elevated movements in rates, but other reports showed a little more tame picture of inflation. Kurt's here to review the progression of last week's happenings.
Thank you, Jim, for that intro. I want to first wish everybody a happy 4th of July tomorrow. So basically for the week, it's probably best to work it chronologically, Tuesday, Wednesday, Thursday, Friday, because there was a plethora of reports that came out on Tuesday, including the April Case-Shiller home price index, the durable goods orders, and the consumer confidence report. In addition, they had a 5-year auction of some bonds. So basically we did this Tuesday. All right, we finished up about where we finished, where we started the day. Next up, Wednesday, was Jerome Powell maintaining a hawkish attitude towards the economy, saying he's not really seen enough tangible evidence of falling underlying inflation. But guess what happened? The markets didn't really react to that. It seems like they're waiting on the raw data rather than the Fed's interpretation or the Fed's rhetoric at this point. Thursday, however, the GDP reports came out and they did show the economy was growing at a greater rate than expected, which the inflation component rose as well. Despite some early and midday losses, though, the market did recover at the end of the day. We didn't finish quite even, but we didn't lose too much. Friday, huge report came out, personal consumption, the core PCE, and it came a bit lower than expected. May did come in line with expectations, but year over year was less than expected. This sparked great news to the markets, interest rates, and we saw the market recover much of the losses that it had incurred Thursday. Overall, the market finished very slightly higher this week than where it opened early in the week.
Last week we ended on a note that the cost of waiting is still greater, which still holds true. Let's take a deeper look at the cost of waiting. All right, so we're gonna go with a $300,000 loan amount. And 7% interest rate. Hopefully it would be a little bit lower than that right now, but we're going to go with 7% for the sake of this example. So your principal and interest on 7% of this amount would be $1995.91. Annual appreciation rate over the past 20 years is 5%. A little bit more over the past 3 to 5 years, but we're going to go with the 20-year average. So that is 5%. So in 1 year's time, if you multiply 300,000 times 5%, that's going to give you $315. So right there, right off the bat, within 1 year's time, in this scenario, you've built $15,000 in equity. Now, say you don't want to buy now, you want to go ahead and rent. We'll just, for the sake of the example, we'll use the same value property. So on a $300,000 property, current rent is around $2,300 a month. You can use whatever your current rent would be for this scenario, but this is what I'll use for the example. Annualize this, so times 12, and that's going to bring you to $27,600. So this is what you're spending in rent for 1 year. Now, say a year has passed, interest rates drop to 5.75%. So at 5.75%, your principal and interest there. Now, this is on 315 because remember, you've gained equity. So 5.75 interest rate here is going to be 1838.25. All right, so here your difference is $157 a month that you're saving between the two. So the question you want to ask yourself is this savings, or how long would it take in this savings to make up this number? The answer is well above 10 years, closer to 15 years. We do have a buyer refire program that Homespire is running right now. If you buy with us and interest rates do drop and you refinance before the end of 2025, we waive all lender fees. I know we say all the time, buy now, refi later, but I just wanted you guys to see it in black and white.
So in my 20 plus years, it's always made good financial sense to purchase over rent, depending on your situation. Some people's situations are unique. However, in most situations, it's better to purchase, start gaining equity rather than rent and pay someone else's equity. So I want to thank you for taking some time with us today and wish everybody a happy 4th of July tomorrow. Go cook some hamburgers and pop some fireworks, and we'll see you next week. So don't forget to like, subscribe, and hit that notification button so you can get notified when we put out a new video. See y'all next week.